Good morning and welcome to the Killik and Co market update. We've had quite a few negative headlines flying around this week about recession, but looking at the performance of equity markets, these really don't imply that a severe recession is expected. July was the best month that markets have had since November 2020, and they've continued to move higher as we've moved into August. Here on this chart, we've got the performance of a number of major equity indices. At the top in the green, we've got the Ftse 100, and this performance is for the year to date. The Ftse, as we know, is very heavily focused on oil stocks, and that's the reason why it's been so resilient this year so far. In the middle, in the black and the grey, we've got the Mscr World Index and the Ftse 250 Index. These are actually quite different in nature, but they have tracked each other fairly closely over the course of the last few weeks. The Mscr World Index is very global in nature, and it gives a good indication of how the global economy is performing. The Ftse 250 is focused on medium-sized UK companies. You would normally expect small and medium-sized companies not to fare as well as large companies in recession, and therefore if a severe recession were expected, you would expect the Ftse 250 to be performing very weakly, but as you can see, it's picked up very nicely over the course of the last few weeks. At the bottom in the pink, we've got the Nasdaq Composite, which is very tech-focused. The tech sector was one of the worst performers of the first quarter of this year, and you can see at one point this index was down by over 30% on a year-to-date basis. However, over the last few weeks, it has recovered some of that loss, and it's now down less than 20% on that year-to-date basis. This week, the Bank of England has raised interest rates by 0.5% in its biggest increase in over 27 years, taking our interest rate to 1.75% as the Bank of England really strives to bring down the rate of inflation. In its monetary policy report that was also published yesterday, the bank said it expects inflation to rise to over 13% by the end of this year, and that's mainly due to an increase in the energy price cap. On this chart here, the bank has shown the main contributors to inflation. The orange bars show goods prices, the purple show services, and the turquoise bars show energy prices. And what you can see by looking at this is that during lockdown in 2020, the energy price actually had a negative impact on the rate of inflation, mainly because there was very little demand for energy during lockdown, and that led to a big dip in energy prices. As we moved into 2021, however, if you look at the orange bars, you can see we had a big increase in goods price inflation. And that was because many people were still stuck in lockdown, ordering lots of goods, and also we had supply chain problems which contributed to higher prices. Going forward, however, the energy price is expected to be the main reason for rising inflation. The Bank of England also provided its longer-term inflation forecasts, as you can see by this chart here. Although the bank expects inflation to rise to over 13% by the end of this year, it does expect it to decline quite sharply thereafter. However, as we know that the main contributor to inflation is the energy price, the future of inflation really depends on what happens with the war in Ukraine. Still on the subject of energy, Russia is continuing to restrict the supply of gas into Europe. Flows through the Nord Stream 1 pipeline are currently running at just 20% of capacity, and Russia is claiming that the reduced flow is due to a faulty turbine that cannot be replaced due to the sanctions on Russia. The restricted flows mean that gas prices across the UK and Europe are continuing to rise, as you can see by this chart here. The US, on the other hand, is in a very different position because it produces most of its own gas and it doesn't depend on Russia. We've therefore seen a very big divergence in the price of gas between the US and between the UK and Europe. There are two key takeaways from this. The first is the importance of energy independence, and hopefully this will encourage the UK and Europe to invest more in renewables. The second is the prospects for the US economy over the course of the next year in comparison to the UK and Europe. Arguably, the prospects for the US look slightly more positive because it isn't having to contend with these sky-high energy prices. Moving on to have a look at next week, it's looking a little bit calmer on the calendar as we come towards the end of reporting season. And as we are looking so closely at energy companies at the moment, we are looking ahead to results from E.ON and Ørsted. That's it from us. Enjoy the weekend, and we'll see you next week.